We trying to get paid.
Making money, make it dollar,
We trying to get paid.
making money,
Yeah,
make
you
it.
save and invest, stacking up checks. Let's go.
Green for the markets and your trading account. Ladies and gents, let's talk about it. If you've loved every episode so far, press like on this video. It really helps with my engagement and improves my standing within this already cluttered space. If you've been taking my advice at all for the last week to jump into the fangs, you've been well rewarded this week. 6 days straight of gains across the S&P 500. We were down a small bit yesterday in the Qs to break the streak, but massive gains all week in the Qs. This is probably the smallest gain I've ever seen in Amazon. $1 today. I was kind of surprised by that. The breadth is diminishing. I'm not going to doubt that. I'm going to continue to bring that up because I do believe a pullback is coming. Now, that pullback will be a buying opportunity. Why? Because Jerome Powell said something very important in today's speech. He said, quote, following periods when inflation has been running below 2%, appropriate monetary policy has been to aim to achieve for inflation, moderate inflation, above 2% for some time. What does that mean, Sal? It means that the Federal Reserve is intentionally looking to create bubbles. The Federal Reserve believes that spending will facilitate the recovery to get GDP where it was before the pandemic. That spending will get black unemployment below 4% again. That spending will create again the tightest job market America has ever had again. That spending will create wage increases that we were seeing for the last several years, whereas employers were literally begging people to come and work for them, right? I mean, you go to fast food restaurants and on every block they were looking to hire people every day because the job market was so tight. There were just more and better jobs for people to get instead of working those fast food jobs, restaurant jobs, bar jobs. Remember, we've had incredibly low inflation in America for several years and everything, right? Besides the cost of rent and the cost of food. So this forced inflation will create what I believe is a very dangerous level of inflation in rental pricing. I mean, if you know people in a town who are struggling with rent now, you don't even want to know what rent is going to look like with 2% or higher inflation 24 months from now. I mean, it could be very, very dangerous for the increasing amount of homelessness that we'll see if Donald Trump wins this election and the current policy of 0% money is allowed to continue, and we start seeing 2.5, 3% inflation happening across the board. That's going to be really, really bad for working class people in particular. All of this inflation talk is going to be good, though, for the biggest beneficiaries we saw today after the speech, which is real estate, unicorn tech stocks, and the shiny metals. I'll touch on those later. Speaking of real estate, SPG up 5%. $5 a share since I mentioned here. I think you really need to also take a look at some of those smaller commercial mortgage stocks. One of them that comes to mind is NYMT. Another larger one is IVR. The inflation of valuation of commercial property will raise the cost of these stocks. I think people are going to start jumping back into these plays again once you start to see companies, coming back in the commercial space. So pay attention to those. The retail recovery is expected to be slow, though. I got to be honest about that. And that's fine. I won't be touching specific retail plays. I'm talking malls. I wouldn't be touching those. But I think office buildings should be all right. But anything travel, restaurants, anything online, anything digital, anything real estate, right? Small commercial, small office. I think it's going to be hot. It's going to be hot, right? for a week and a half, I've been screaming about these delicious Red Robin gourmet burgers. Right, I got 1,000 shares at $9.58. I'm up very nicely, and I'm happy with that. And I have no doubt in my mind, I'm going to double my money when, RRGB hits, $18.50, $19 by, March of next year. I think even earlier, possibly. Right? I like to give myself a lot of time. But in the chart right now, it's coming, folks. I mean, it's coming. I mentioned, look, if you're a family man, you've enjoyed being at home with everyone. But if there's one thing I think a lot of, men would love to do right now is take their family out to have some dinner, without wearing a mask. A lot of you guys who are doing it right now, you kind of looking goofy, goofy as fuck, to be honest with you. You look goofy sitting at a restaurant right now. It's damn near empty, sitting at the restaurant trying to eat when nobody's there, and the employees are pissed at you that the fact that you even decided to show up. You just look stupid. Just sit at home like normal people right now until this thing blows over. That brings me into my next pandemic recovery stock, which is Play, Dave & Buster's. Buy the stock, but don't actually go show up at a Dave & Buster's right now. I don't know how many are open or closed. I really don't care. All I'm saying is that, are these stocks at the bottom? And I think this is bottom. I think this is bottom. And even if you're a day late or two, you're still very early in what I think is going to be a massive recovery in both of those stocks, RRGB, Play, and then I mentioned also Live Nation. Live Nation doesn't have as much meat on that bone left, but there's still some there, and that could be another monster play. All right, but let's go back into travel. H, right? HLT. H is Sheraton. HLT is Hilton. Boom. Nice day for Hilton, right? I'm selling the $90 puts in Hilton. That's the number one business hotel in the world. That's a no-brainer. That's a $100 stock right there. I like the work at home thing. Don't get me wrong. I like the work at home thing. But I know and I understand a lot of these guys who travel for business are big time cheaters, man. Not all of them, but a lot of them. I mean, they are really unfaithful guys, and during this pandemic, a lot of them haven't been able to move as freely as they want and haven't been able to do a lot of those unfortunate things that they are typically known for doing. Right. And I think a lot of those guys can't wait to get out the house and go somewhere very far from home and attend a conference away from their loving old wife and rent a big room and smash some local hot, single mom or go to a strip club, just get out the house. Of course, that's not the majority of, the business for tickers like HLT, but conferences are a big part of tickers like PK. Right, PK is Park Hotels and Resorts. That, by the way, is a spinoff of Hilton. It's very boutique-ish, and PK is one of those places that, again, you can be in that stock, and it could very well hit $15 or $16 in the next couple weeks. Right, definitely when we have a cure for this thing. But again, this is a stock that I think is at bottom here. Right, on real estate stocks, they're relatively low volatility. And if you are looking for liquidity in the options, I think you have to be on the monthly expiration calls and puts. That's pretty much the way you kind of play those stocks. Now, what's going on in Planet Fitness is a little bit ridiculous. People are going to be really surprised at how few people go back to the gym. I think home gyms are the shit. And I think a lot of people have found that home gyms are better. And they enjoy being at home, working out in the quiet of their own home, right? If you've ever had a decent home gym setup, you don't go back to a home gym, right? I used to clown Peloton, but then over this pandemic, I got an opportunity to ride one. I got to experience the music, the increase and decrease in the hills and tension. And man, now I learned why that bike is so hot, man. When you're riding a Peloton, you're taking a live class, whether it be a live class or a recorded class, you're riding with people all over the world. You're riding a Peloton and taking a live class or a recorded class. You're riding with people all over the world. You could be riding a gym in New York, in LA, and the vibe is different at each place with each trainer. PTON is what the new gym experience looks like. I think it could possibly be a $50 billion company. That's twice as big as it is now. And with the 0% money, it's unicorns just like this that are going to be the biggest beneficiaries, along with another stock called Rocket Mortgage. I've already mentioned Rocket on this show, and this is another stock you're running out of time getting below $30 a share. I'm telling you right now, this is your PTON, your CVNA of buying houses. I'm not going to talk too much further about Rocket today anyway, because I'm just going to end up saying a lot of the same thing I said about PTON. But, don't underestimate the value of convenience or privacy. On Monday's episode, I want to go after the eateries that I think will slow down significantly due to the fact that the sit-down restaurants are going to be gaining steam again. COVID has been a horrible thing, but I think we're getting to a point where people are just like, to hell with it, I'm just going to go out there, which is really unfortunate. But that does kind of mean that some of these sit-down restaurants are going to see some life. And does that, mean companies like Wingstop, WING, and Domino's, Papa John's, PZZA, those are going to come down in value as they have to now share, a bit of that market share, right? How many people are sick of pizza right now? A lot of people are. I think a lot of people are. When Tesla opens up, by the way, on Monday, I think you got to slap the bid, man. You got to slap the bid, and you got to sell those monthly puts or buy those calls. What you're going to be getting on Monday is access to the greatest car company in the world for $250, $270, $275 or whatever it is going to be. That's a priceless opportunity, and also a real learning lesson in that, these guys who are getting 5 shares for every one that they have, these are the real wealth builders here. Many of them have been in for years and got into Tesla at much, much, much lower prices. They are Tesla millionaires out there, meaning that they got in early and just sat around. I'm not talking about the people who work at Tesla, although many of them are those people. I'm talking that there were some shareholders who were just like, look, I really believe in this company. I think this company is going somewhere and I want to buy, right? This is real wealth. This is something they can pass on to their kids, their children's children. These are what are also called right now the GM jobless, of the future. If you're from Detroit, you know about the GM jobless. These are the great-grandchildren, the grandchildren of GM workers who were so dedicated to the stock reinvestment plan that every paycheck they elected to buy shares of stocks. And those stocks over time split and split again. And now, thanks to the power of time and dividends, pay over 10,000 American families over $100,000 a year, right? To do nothing. And that's been the case for the last 50 years. Now, the time value of money is catching up, but those families have reinvested that money into other issues, into other opportunities like real estate, and that money has gone on to create millions of dollars in other lines of businesses, right? We're playing a beautiful game here, but you seriously need to ask yourself, am I playing it the right way? Am I truly playing this game to win in a serious way, right? Do I need to maybe leverage up a little bit? Do I need to get a little bit more aggressive? Do I need to, really figure out, hey, I started in January or I started at 1 month. Am I really growing? Net after all of my expenses, has this been a worthwhile experience, in 2020? And if it hasn't, I think it's time to either go back to the drawing board and get a little bit more aggressive, maybe make a bigger commitment, to studying and learning about how to really make it work for you, or just starting to be, again, more bold, more bold. Am I making trades that make sense, right? Or am I making it difficult for myself by trying to outsmart the market, right? Instead of being what Bruce Lee says, which is just being like water and going with the flow, right? And going with the flow. Ladies and gentlemen, when it comes to the VIX, it is acting a bit weird. I did see David Lincoln, mention that in the chat, but, that 23 has been holding for some time now, and I am concerned about that. But again, that's why I think a pullback is coming, because, we haven't been able to break that sub 20 VIX. And that's telling. That's telling. That means a nice little correction is coming. And if you've been on the sidelines, that's going to be a great opportunity for you. Whether we spike to 30, spike to 35 or 39, I could care less. Wherever it spikes to, right, I want to be a buyer there, because I know there's more federal money coming down the pipeline. And as disgusting as that may sound, it's disgusting as that might be for the deficit and everything and all that much, at the end of the day, folks, there's nowhere else for investors to go. All right, you can't go to bonds. You can't go to international treasuries. You can't even go to international stocks. They're doing worse than us. There's only one place you can go, and that's the United States stock market. Period. It's your boy Sal. Enjoy the week. See you on Monday.